Hello everyone, welcome to One Stop India, your one-stop solution for tax complaints. In this video, we are going to see one of the interesting and most important heads of income tax, that is income from house property. Most of us would have made the investments in the land or building and we would be receiving some portion as income from those properties. It may be a house, it may be say some office premises, or it may be a land or land with building, whatever it may be. Any income derived from that on a case-to-case basis will be getting taxed under the head income from house property. And in this video, we are going to analyze how this is going to be getting taxed in your income tax returns. So generally, if you take any house property, it can be of two types. It may be a self-occupied property or it can be a let-out property. And moreover, in case if you are using it for the business purpose, that is the letting out of properties is your business income, then it will be getting taxed under the head income from profits and gains of business or profession. Else, in case if you are not doing it as a business, then it will be getting taxed under the head income from house property. So coming to the first part, that is income from self-occupied property. What is meant by self-occupied property? It means the house property which is being occupied by yourself or your parents or your spouse and children for the self-consumption purpose. And a recent amendment made that a single person can show up to 2 house properties as self-occupied. And in case we are having more than 2 properties, then the house property which is going to be more than 2, it will be shown as deemed let out or let out. Then here comes the answer for your second question. What about the income from let out property? So the name itself suggests that you are going to get some rental income from the let out property. So assume that if you are getting a rental income of say 1,10,000 per month, you can reduce the municipal taxes which you are being paid instead of your tenant, and also you can claim a 30% standard deduction on the rental income. Moreover, in case if you have taken any property loan or the housing loan for the construction of the property, you can claim the interest expense without any limit for let out property. However, for self-occupied property, there is a maximum limit of 2 lakhs in relation to the interest which is being paid for the housing loan. And you can also ask me another question. In case if you are letting out the properties as a business, whether you can claim any expense, it is going to be absolutely yes. Say for example, if you are having almost 20 properties let out and you are doing it as a business, in case if you are taking incurring any expenses in relation to those properties, you can ultimately claim those expenses. The next question. In case of self-occupied property, I won't be receiving any rental income. So assume that I have taken another housing loan for that property. So whether my income will be negative, the answer is going to be yes. Because of self-occupied property, your income is going to be 0. And in case if you are paying any interest in relation to the loan taken for the self-occupied property, your income from house property will be going to be 0 or it is going to be negative. So assume that if you are paying 1.5 lakhs as interest during the period for your self-occupied property, you can claim it as a loss from the head of income from house property. Moreover, there is a maximum cap of 2 lakhs for the carry forward of loss in relation to the house property. But there is an important note. If there is a loss from the house property, that is when the property is self-occupied and your gross annual value is going to be nil, and in case if you are paying interest in relation to your housing loan, there will be resulting a loss from income from house property. But that loss can be restricted only up to 2 lakhs in a financial year, and any loss over and above 2 lakhs can be carried forward to the next year. Here comes the answer to your next question. I assume I am taking a housing loan and I am paying both interest and principal. What happens to the principal component? Whether there is any deduction which has been available to that? The answer is going to be yes. You can claim the principal repayment under section 80C up to a limit of 1.5 lakhs. Moreover, in case if you have paid any registration charges or stamp duty in relation to the purchase of house property, you can very well claim it under the section 80C, which will be coming under the total limit bracket of 1.5 lakhs. There is also an additional tip which we are happy to share with you. In case if you are a co-borrower or a co-owner, whether you are also eligible to claim the deductions and the benefits. The answer is going to be yes, provided you should be a co-owner for the property, and in case if you are taking a housing loan, you should be a co-borrower in the sanction. In case if you are satisfying those 2 conditions, you are also eligible to avail the limit of 2 lakhs under 24B, that is under deductions from income from house property, and also a limit of 1.5 lakhs under section 80C, which is a deduction bracket. So I hope you got a better understanding on how the income from house properties are being taxed under income tax. We shall meet soon in another interesting video. Until then, bye from Surya on behalf of One Stop India team. Thank you.